Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Market Reporter at Nasdaq. Joining me for this segment, we have Sara, ESG Index Strategist with Nasdaq Global Indexes, to discuss an index that has consistently provided higher yield than that of the Nasdaq US Benchmark. It is great to see you, Sara. Welcome back to Trade Talks, and tell us about this index where we're seeing some outperformance.
Hey, Jill. So today we're talking about the Nasdaq US Multi-Asset Diversified Income Index, symbol NQMAUS. It is a little mouthful there, but it serves as the underlying index for the First Trust Multi-Asset Diversified Income ETF, symbol MDIV. And this index really is designed to provide low volatility exposure to those higher yielding areas of the market. So a diverse spectrum, including equities, REITs, MLPs, preferreds, high yield corporate bonds. And each of those is rebalanced quarterly. Each of those segments, is rebalanced quarterly at 20%. So it really does provide that low vol along with that diversification. And this index was launched back in June of 2012. So we just crossed, a little over 10.5 years of history there.
And Sara, what's the eligibility to be included within this index?
Yeah, so the eligibility for the 5 segments, one segment, the high yield corporate bond, is made up of the First Trust Taxable High Yield ETF, symbol HYLS. The other four segments have built-in screens based on market cap, trading volatility, or trading volume, volatility, and yield. So outside of that high yield corporate bond ETF, the remaining 4 segments are volatility or are yield weighted. And again, those segments are rebalanced quarterly back to 20% to keep one from getting too big. So really keep it kind of even there. And again, that low correlation between the various segments, along with that quarterly rebalancing, really does maximize the diversification potential here. And as you mentioned, seeing that yield, providing more yield than that of the US Nasdaq benchmark, NQUSB, 5.9% this year. So really providing that income. And again, this is, when you're looking at that NQUSB, that is a majority of equities and also does have some REITs. So here, when you're looking at 20% equities, 20% REITs, preferreds, MLPs, et cetera, that really is where that yield is baked in and coming from. So really seeing that there. And then also, when you look back at the 90-day volatility, except for 2009 and 2020, which we know were exceptionally volatile years, we've seen the index remain at or below the Nasdaq benchmark index's volatility.
And Sara, to wrap up here, what about performance relative to other benchmarks?
Yes, the performance itself, we're seeing about 6.4% annualized return here since inception. This particular chart, the shaded in blue area, that is the return of the index. The other 4 pieces or other 5 pieces are the various segments within that we mentioned, the preferreds, the MLPs, the REITs. So naturally, we do see that right in the middle there with equities, that 20% of equities really outperforming at the top, along with preferreds. And then down at the bottom, we're seeing REITs and high yield corporate bonds kind of lag there. But over time, we have seen strong outperformance, and this year, as you mentioned, outpacing the market as defined by that Nasdaq US Benchmark Index by 15.5%. So best year relative to the market since 2009. And again, this really does come down to those individual segments that make up the index. And like I said, right there in between those 5, while providing that consistent yield.
All right, Sara, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.